The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time Tuesday morning. And we got markets in negative territory, but we're getting a little bit of an acceleration right now off the lows with the S&Ps just 5 points in the red, trading at 39.08. We're a solid 15 points off the lows that we were trading at just about a half hour ago. We have a little bit of Chairman Powell with some comments this morning. He'll be making an appearance. Nothing too surprising just yet. Nonetheless, markets catching a little bit of a bid. Negative by 3 points now. NASDAQ 100, you're negative by 20. Quite the sell-off intraday yesterday. You're still sitting more than 200 points above the highs that we had yesterday. And basically, markets kind of just coming into right where we were near the close yesterday. NASDAQ 100, you're catching a bid by about 70 points. We're negative by just about 10 as markets continuing to accelerate higher. We got the Dow negative by 40 points. The Russell negative by less than 1 point right now. We jumped to Bitcoin. How about Bitcoin yesterday, man? From Friday at 16.6, 16.7 we'll call it, up to 17,440. We're sitting at 17,300 on Bitcoin. Tell you folks, it doesn't make sense that that's what it looks like when you get one of the biggest Ponzi schemes in the world in history. In terms of that's what the chart looks like for Bitcoin. It trades from 20,000 down to 15,000, and just like that, we're at 17.3. Not sure that's the shakeout, but we will see. Crude trading up 78 cents at 75.41. Back to a 15-minute chart. You see the volatility this morning. Crude catching a little bit of a bid this morning as well. We got the gold contract. How about gold? Didn't give up any of the gains it had in terms of Friday, pushing yesterday to 1886. This morning, we're nearing 1880, up a buck on the session. And we jumped to notes and bonds, a little bit of pullback of the price action we had yesterday. The 10-year is negative by 11 ticks, and that's after catching a bid. We were negative by almost 20 ticks coming in to the start of the program. Right now, you're negative by 11 ticks. Excuse me, we got the 30-year negative by a full point right now at 128.28. We jump over to the volatility index this morning. We catch a little bit of a bid yesterday. All things considered, not too dramatic in terms of the run that we had this morning. Backing off a bit as the market's catching a little bit of a bid. You got the VIX at 22.12. We got to jump around to currencies, man. Currencies, yields running so much this in this market. We have the dollar index backing off a bit. You're technically positive on the session, but you see the volatility rolling over everywhere in this market. We got a weaker dollar coming into things right now. We have the S&Ps negative by just 4 points. And let's jump over to some of the Fed speak we got. Mr. Powell stresses need for Fed's political independence while tackling inflation. Well, that's not anything new coming from the Fed chairman. Powell on Tuesday noted that stabilizing prices requires making tough decisions that can be unpopular politically. That's par for the course, folks, in terms of the Fed and what they deal with. In other remarks, the Fed is not and will not be a climate policy maker. So he's kind of spanning the board a little bit here, not really going into whether it's going to be 25 or 50 at the meeting coming up at the end of this month. But yeah, he's talking a little bit, and that makes sense, folks. No matter what you think about climate change, man, the chairman of the Federal Reserve is not going to decide climate change in terms of how we approach it from a policy perspective, and that's kind of what he points at here. The absence of direct political control over our decisions allow us to take these necessary measures without considering short-term political factors. That's supposed to be the reason why the Fed is independent. And yeah, they get into the reason why, of course, in terms of the recent rhetoric or revolving around that. I was looking for the climate change quotes in here. Here we go. Decisions about policies that directly address climate change should be made by the elected branches of government. I would agree, without a doubt, no matter what you think, and thus reflect the public's will as expressed through elections, but without explicit congressional legislation, it would be inappropriate for us to use our monetary policy or supervisory tools to promote a greener economy or to achieve other climate-based goals. We are not and will not be a climate policy maker. Now, I put that all out because that makes a lot of sense, folks, no matter what you think in terms of where you are along the political aisle. But as you can see, not really talking in depth yet about what you may be looking for him to talk about if you're talking about what's happening with the market. What does he think about the jobs number? What does he think about the probability of going 50 or 25 basis points? None of that really mentioned. So market catches a little bit of a bid. Maybe the market was worried that he was going to come out a little bit more hawkish. But nonetheless, quite a little rollover from yesterday, man. We were up at 39.73, folks. And just like that, this market gave up about 82%. Man, you don't get 2% swings in healthy markets like that on basically nothing. Okay, we got a little bit of Fed speak yesterday, which spooked the markets potentially a bit from 39.73 down to near 3,900 by about 9 o'clock last night. But yeah, not divisive isn't the word. No real dramatic news in terms of driving that market 2% low, but that's the market we're in right now, man. Market's very uncertain where valuation should be as we come into a pretty big earnings season to kick things off. And Friday, we kick things off with the banks. We get CPI data on Thursday ahead of that. All right, let's jump around to what else we have pulled up here. I'm going to start off with an interesting one, man. Have you seen the chatbot, ChatGPT? Okay, it's an artificial intelligence tool from OpenAI. And what is the... Well, look at that, man. There it is. Wow, look at that. What are they doing? They're linking to a... Oh, that's December 22nd. Okay, this was just talking about the chatbots coming for Google. I pulled up a few different articles, all right? The article that is this morning is that Microsoft considers a $10 billion investment in ChatGPT. This sounds a little bit of bubblicious, man, okay? But guess what? This is the forefront of technology that can change the world. That's the kind of stuff that got said, and I was a young guy, man, on the dot-com bubble, hadn't even finished college, was not really aware of life and the wisdom that comes with a little bit of time on this planet, okay? But this sounds a lot like bubblicious valuations, okay? This thing just hit in terms of recently, ChatGPT. But when you look, whoop, I got ads talking to me left and right here. There we go. There is the dramatic possibility that this does change things in almost every way, especially Google seems to be the one that's mentioned continually. But they are in investment, they are in discussions, okay, and it's a pretty sweet deal, I think, for Microsoft, depending on how this plays out. But they're going to invest as much as $10 billion in OpenAI. It's going to value the company at about $29 billion. All right, now these documents they're looking at had targeted the end of last year for the deal closing. It may have even closed already. They launched this at the end of November, this ChatGPT. Now, OpenAI was founded, I believe, in 2015. And I was looking at their Wikipedia page, man. They got investments from everybody. They started with $1 billion, I think, when they kicked things off in 2015. But what are they doing? They've been burning through cash to keep up with the viral sensation that they have become, okay? Now, the new technology is built on OpenAI's GPT-3 language model, and it comes at the end of a year of headline-grabbing advances in AI. What Microsoft is getting here, okay, is that they're going to get, do they list it here? No, maybe it's in the CNBC article. They're going to get 75% of the profits until they get all their money back, and then they own 49% of the company. That's a pretty sweet deal, man. There it is. 75% of OpenAI's profits. They got to make some money, though. They're probably making no money right now, which is why that deal's getting done. $10 billion they're going to provide. And then after they get their investment back, they own 49% of the company. Talk a little bit more. We'll talk to our man Kevin Hincks when we get back. Stay tuned, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&P negative by just 3 points right now. NASDAQ 100, you're negative by 18. You get the Dow right now negative by 29. I'll pull it up on the chart, folks. You take a look. I'm just going to go back a 20-day hourly. Now, if you take, let me get rid of that. If you don't include the spike that we got pre-market on December 13th, and what was that? That was a big data point day. I remember there was the talk of maybe the data got released early. Was that maybe November CPI or something to that degree? It was an 8:30 data day. It spikes. It gave it all up by about 11 o'clock. If you just take the move that we had lower, folks, okay, and I sent out a letter to my subscribers yesterday. I'm going to take off this bigger one for a little clarity here. We got so many Fibonacci's everywhere on this chart, folks. Okay, we do. We're going to jump over. Why not? Let's jump over to our man, Kevin Hincks, folks. We'll talk about the market anyway with our man, Kevin. Every trading day, folks, 12 noon Eastern time, fast market from the TD Ameritrade Network, and we're going to jump right into it this morning. Kevin, we haven't talked to you since last Thursday, man. We got non-farm payrolls on Friday, quite the reaction in the markets, and we have some Fed speak already coming into this week. Good morning, Kevin.
Good morning, Tommy O'Brien. Yeah, a lot going on this morning for a Tuesday. Coming off of Friday's big rally on, let's face it, surprisingly strong data, both in terms of jobs and terms of lower inflation. So pretty solid stuff going on there that caused a significant rally. Now, what might be the most surprising part of this, and the second hand, is that it faded yesterday pretty quickly from the overnight Sunday rally, and a lot of skittishness came into this market yesterday. Now, Jerome Powell making comments in Stockholm, Sweden this morning. Mainly the main topic of his speech was called central bank independence. So he's not making a lot of comments on inflation overall, basically right out of central casting, let's face it. So it should be relatively benign. Futures were down about 0.5% in the E-mini. Now they're close to unchanged here, down less than 1/10. But overall, Tommy, we got some NFIB small business this morning that is pretty significant. I mean, another 12 consecutive months below the 49-year average of 98. So more weakness there as the overall, here's the comment that their chief economist made. Overall, small business owners are not optimistic about 2023 as sales and business conditions are expected to deteriorate. So William Dunkelberg making those comments. So the overall small business is seeing some weakness here, Tommy, but right now we're waiting for inflation on Thursday and then the start of earnings season on Friday morning, Tommy.
And it's interesting you bring that up, Kevin, because we were talking about ADP numbers the last time we talked, right? And small businesses, the ones, they were the engine of everything, man. Bigger businesses, actually, with the layoffs, if small businesses get hit, maybe they're late to the party with the layoffs. We'll find out, man, as we march forward. You mentioned it. Thursday, we get the CPI data. We have some Fed speak today. Friday, we kick it off with the bank earnings. Kevin, we get a Fed meeting at the end of this month, January 31st, February 1st. The next meeting after that is March 21st and 22nd, and then you go out to May. We have a bunch of data in there, but what's your general take as you look forward? And I'm looking at this schedule right now, and I'm saying, man, it is pretty interesting that you have two meetings in basically the next 4 months, which get us to May. There's a lot of data that's going to come in. Now, we get the January 31st and 1st meeting. We've made it through some, but we got some earnings coming up through there. But it is interesting that you just got the one meeting in between January, late January, early February. You get the March 21st meeting all the way to May. There's going to be a lot of data that comes in line. We start things off Thursday with CPI. What's your general idea, Kevin, with the Fed that's driving so much of the rhetoric, at least? You know, the earnings discussion is happening right now as we come into some big earnings this month throughout the quarter. But what's your general take as we go forward? Now, this meeting, it seems like consensus is 25 or 50. But it's interesting that they have a March meeting, Kevin, that's about 6 weeks out right now. Is that right? No, 10 weeks out, to March. And then we just get May. It seems like that's going to be a super important meeting in March, because what happens in terms of the indication where we go from May? What do you think about that with the 3 meetings leading up to May right now? I think that's an interesting one in terms of how that shapes out.
Well, here's the good news. Right now you've got a 10-year that's trading just over 3.5%. That is a pretty big divergence from the over 5% that most of the Fed thinks that target rate has to get to. But the bond market, the notes are telling you something different, right? What the 10-year yield. But you're going to get more inflation data between now and then, and I'm sure that'll all come out. Do we, Tommy, whatever we want to say about inflation is it seems to be coming down. The payroll data, the wages data was pretty good, but you had $1.7 trillion in spending passed in December. What do you think that's going to do to inflation? It isn't going to help it go down, that's for sure. So I think things are going to get real interesting. The real question for traders, Tommy, in my opinion, is where does inflation get sticky? Where does it plateau and stop going down? If it's slightly around 2%, then Jerome Powell's a big winner. But if it stalls at a higher level, then rates have to continue to go higher, Tommy.
And so let's jump to Thursday, Kevin. So we get the CPI numbers for Thursday. Let's see. We're looking for the headline CPI to come in at 6.6% about. It was 7.1 for November. The core is expected to come in at about 5.7. It was at about 6% last month. What's your general take on maybe where that? I know the data is going to drive it all, man. But you make some great points, right? Of how far do we get? How quick do we get to that point? Because I would agree, it's coming down. We're just at such lofty levels right now. And I look at these numbers, Kevin, even month over month, right? Let's just jump to the core CPI, and I'm just going where the headline year over year number goes. Well, if we're going from 6 to 5.7 over a month, it's going to take a while to get to 2%, man, unless things accelerate. And a lot of people are talking about it might be even tougher as we get to that 4%, 3% number. What is your take on how this market will be looking for Thursday with some pretty lofty numbers? Headline at 6.6 and the core at 5.7. I mean, those are some pretty crazy numbers in any other time.
Yeah, I'm an economist, Tommy, so let's make some assumptions. Let's assume that those numbers come in right at expectations. What you said, 6.6 on the headline and 5.7 on the core. Well, if you're Jerome Powell, you like the progress, but you still got a 6 handle on the year-over-year headline, and you still got a 5 handle on the core. So you've got a long ways to go. So what Jerome Powell, what they've done efficiently is stay on topic. It's not, maybe rates don't have to get above 5%. But that doesn't mean, I think the Fed has done a real good job of dispelling all the thought that they may lower rates this year. I don't see that happening at all, Tommy. I never saw it happening. Some of the futures markets did, but Jerome Powell quickly dispelled that. So the question is, how high do the rates get? That, the data will determine that. And then where does it land and sticky? So, a 6.5 handle on headline CPI, over a 5.5 handle on core. We're not done. They're not even close to done, Tommy.
I appreciate it, man. I agree. It's like those are some pretty lofty numbers with the exuberance in this market. With that in mind, Kevin, we got 30 seconds. What are you guys talking about at 12 o'clock today on Fast Market?
Lightfolio focusing on Home Depot, so we'll cover Lowe's as well, and we'll keep it in the retail sector. So expect Home Depot and a bunch of retail today.
I like it, man. Thanks for the conversation, Kevin. We'll be watching. We'll talk to you tomorrow, man. Have a great one.
Thanks for having me on, Tommy.
Tune in, folks. 12 o'clock today. You heard it. Home Depot, Lowe's. We'll be right back for the open.
And risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps open. We're negative by 2 points on the open right now at 39.11. You take a look. That's a daily. I was going to jump back real quick. I was doing this before we jumped on with Kevin. You take a Fibonacci look in terms of where we are, folks. The acceleration we got from the day after December 12th. December 13th, I think that was Fed Day. I think we got some data on the 12th. I'll have to pull this up. If anybody remembers in the den, I just got to take a look at it. Let's scroll down. There's some economic data on the 13th we got. Is that right? Is that the 13th? Yes, and then the 14th is when it sells off. Look at this. I got weird data on my Thinkorswim. See how the date on the bottom of my screen right now is showing the 13th? But when you look up at the date actually where my cursor is, it's showing the 14th. I believe that's the 13th and 14th. December 13th was the data day. The 14th was the Fed day, potentially. Nonetheless, you take a look at where we are, folks. That acceleration higher, all it did was get us right near 618, man. Okay, you got to a price point yesterday in the S&Ps, the 39.73, 39.83 gets you exactly to the 618, and that's of a move, folks, from 4,090 down to 38.08. You're talking about almost 185 S&P points from the move to lower price. You get that acceleration. We're catching a little bit of a bid again. Right now, you get the S&Ps positive by 2. Let's check back to Microsoft. So Microsoft, they're looking to invest $10 billion in ChatGPT. OpenAI is technically the company. ChatGPT. Now, it's interesting. I was just taking a look at this, right? And this is probably why they need some capital, because when you pull up the ChatGPT function, they're at capacity right now. They don't have the servers to be running what they're running. And this thing is pretty cool if you haven't checked it out, folks. It's fascinating to see how it can write things in certain ways. You can ask it to write things in the form of, how Eminem would rap something, right? You could tell me, tell me how to trade options and do it in the style of a rap from Eminem or something like that. And the way it can nuance that is pretty amazing. Now, there's a couple stories that go with this to talk about where we are, though, in this technology. New York City schools ban ChatGPT, citing fears about safety and accuracy. This is not fears about plagiarism, which is a fear for sure as these things become prevalent, okay? But this is talking about that, guess what? It's not quite there yet in terms of you think it's certain, okay? In terms of you think, let me pull up these articles to get the exact ones in terms of, oh, where are we? I had a good one, too. We got too many screens up here, folks. Here we go. Here we go. I wanted to get this quote. Oh, no, that's not going to be it either. Okay, I'll pull it up. It was a quote from Sam Altman, who is the founder, saying, where were we? That was somewhere. Shame on me. I just lost it. Yeah. Maybe it's here. Here it is. Thank you. So this is the founder of OpenAI, Sam Altman. ChatGPT is incredibly limited, but good enough at some things to create misleading impression of greatness. Imagine tweeting this out yourself as you're closing a funding round, valuing your company at almost $30 billion, taking in $10 billion cash. It's a mistake to be relying on it for anything important right now. It's a preview of progress. We have lots to work to do on robustness and truthfulness. Okay, so it's fascinating, but that I think is part of the reason why New York City, they're talking about that they don't want bad info, man. Artificial intelligence developed by OpenAI, released in November, attracted immediate attention. They're talking about a valuation of $29 billion, as we're talking about. It's banned across the district, but specific schools or sites will be able to request access to give students access to it. So they're going to allow you to use it, but they're not going to allow you to just use it indiscriminately. Due to concerns about negative impacts on student learning and concerns regarding safety and accuracy of content, okay? Because people are going to be doing this. They're going to be taking it as the Holy Grail like it's truth, and it's not. It's a technology which is evolving, okay? While the tool may be able to provide quick and easy answers to questions, it does not build critical thinking and problem-solving skills, which are essential for academic and lifelong success. Yeah, they're also saying, hey, go do the research, okay? This thing is going to literally write papers for you. Now, we'll go from there, okay? Because what is the reason why Microsoft is pushing $10 billion in this technology? Well, you know what the reason is, folks? Because they're talking about that they could blow up Google. The chat box are coming for Google. Now, this one is a December 22nd article, okay? But this talks about ChatGPT, and it makes sense, folks. What do we Google? Information. What do we Google things for? Information. Well, what if there's a technology that makes that information more deliverable, easier to digest, clearer, more concise, more thorough, right? Right now, you Google something. Many times, what do? You end up at Wikipedia or something like that, right? Maybe you got there's some good information on Wikipedia. But yeah, ChatGPT, Shazam, is their chat bot, okay? Basically, it's a chat bot. You talk to it, it talks back to you. But it's using technology that mimics a human to the degree that it's very difficult to tell the difference. Now, I read an article yesterday, I think, about a Princeton student who designed, and I'm going to try and find this one after the break, but he designed a program to tell whether something was written by ChatGPT. So there's still tendencies that allow you to tell if it's computer written. It's not infallible, as in they can make mistakes, just like any type of thing like that on the internet, scanning for plagiarism, stuff like that. But you're going to start to see that come in as well. But guess what? Google's been untouchable, and this is the one thing that could push them for search. And boy, you know how much money they make, man. And it's all about search in terms of where they make it. But some of the technological breakthroughs underpinning large language models were forged in their own research lab, right? But entrepreneurs from Google have left Google. And yeah, they raked in $54.4 billion in advertising revenue in the most quarter. That's 79% of gross sales. And search ads, folks, 92%. 0.2%. Now, this is November 2020 data, okay? But man, that is something that's probably going to get disrupted in the future, okay? It's amazing that Google's been able to hold on to that type of search engine market share when the internet controls everything in our lives, and they've been doing it, folks, for about 20 years. I remember when I had my college roommate in dorms, sophomore year, lived with him junior and senior year as well. Sophomore year, comes into our dorm room and tells me, so this is sophomore year, we're talking about, graduated high school in 98, so we're talking about maybe in the year 2000, okay? And they told me, our man Jay, that you got to use Google, man. And he was really into computers, okay, at the time, building his own computers at the time. And he said, you got to try Google, man. That's the new search. It tells you everything. So what was that, 23 years ago? And they got 92% of the market share. So pay attention to that. Microsoft's paying attention to it with a $10 billion investment. And if I'm a Microsoft investor, man, I like that deal. I mean, that sounds like a deal they make on Shark Tank, man, that most of the time founders won't make. They're going to get back their entire investment if things go well, and they're still going to own 49% of the company. In the long term, if that deal goes well, man, that's quite a profitable deal, to say the least. There'll be a minority owner, but you're talking about 49% ownership in a company that's on the forefront of technology that could drive disruption in this search arena. And with that, we got Microsoft up 1.5%. We got the S&P up by 10. Stay tuned, folks. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got Amazon up a full percent this morning. We're trading up 93 pennies at 88.27. We jump over Home Depot and Lowe's. Are going to be taking a look at on Fast Market with our man Kevin Hincks at noon Eastern time. You got Home Depot up about 0.5% right now. You got Lowe's up about 0.8% right now. Let's take a look at the banks as we got bank earnings coming on Friday. JP Morgan up about 0.5%. We got Citi basically flat this morning. Bank of America up about 0.1%, and Wells Fargo up about 1/3% at 42.53. So those are the four equities we get on Friday. Goldman Sachs, Morgan Stanley, they are later in the affairs. They do not come out. Let's check out when they do. We jump over to the Analyze tab. We jump to the Earnings tab. Yeah, they're a week from today. So their next Tuesday is Goldman. Let's see. And next Tuesday is Goldman Sachs as well. But the other four I just pulled up in terms of the retails, Wells Fargo, Bank of America, Citi, and JP Morgan, all tomorrow. Okay. Checking back Microsoft real quick. Microsoft, they're out with their numbers January 24th, 2 weeks from today, as that's the beginning of some of those tech earnings. January 24th, tech earnings stretching into the beginning of February as well, as we get 2 big weeks of tech earnings. Let's see how Tesla's doing this morning. Tesla, they'll be out with their numbers January 25th. They finally pair 2 days of pretty dramatic gains. We're right now basically negative by 0.4%, trading at 119.28. And let's jump around to some of the equities that are moving this morning. Bed Bath & Beyond, out with their numbers, get you in a little bit of a bid, but be careful, man. Bankruptcy looming on this equity, so you're risking everything you put into it. Up 6%, but boy, you talk about percentages on small numbers can be deceiving. You get the spike, early Monday, is that they had not filed for bankruptcy yet after putting out some notes on Thursday, I believe, that said that maybe that was what was going to happen. Bed Bath & Beyond, wider than expected loss as possible bankruptcy looms. That's basically all you need to know, man. Negative operating cash flow, $307 million. Yeah, not sure how you compete, man. Look at the size of this. Oh, I thought that was their story. What's that, a Staples ad? No, that's a Bed Bath & Beyond. Yeah, look at the size of this store, man. You can't pay that type of rent these days with selling what they sell. It just doesn't happen, man. That business model, how do you compete in that business model? You know, they need to do something different, and they're not doing it quick enough where they're probably going to go BK. Wider than expected quarterly loss. Chief executive acknowledged the turnaround plan had not achieved its goals. Negative cash flow of $307 million for the quarter. They lost almost $400 million during the period. That's even worse than the $385 that they projected just last week. Are you hearing this, folks? Right? That's the part I wanted to get to here. They projected a quarterly loss of $385.8 last week. They can't even keep up. Week by week, they lost, what is that exactly? $7.2 million more than they thought they were going to lose just last week. And that's 42% larger than what they reported a quarter ago. They got $100 million impairment charge in there. $365 versus $223. Revenue, $1.26 billion. I mean, you compare it to the revenue, man, that's a huge loss on just a cash flow perspective compared to the revenue. Comp store sales dropped by 32%. Yeah. And if you just have the namesake Bed Bath & Beyond, their sales dropped at 34%. And even Bye Bye Baby, which is like the gem there, right? Which if they do go into bankruptcy, that would be the one that maybe they are able to get some equity out of. Declines were in the low 20% range in terms of Bye Bye Baby's comp sales. Doesn't even make sense how that's happening in terms of where you go for. So be careful. You know, I would say that's probably going BK, even though you're up 6% today. You're not really up, folks. You're just chopping around between 160 and 180 as this thing tries to digest the probabilities that they go BK. All right, what else do we have pulled up here? Yeah, Coinbase. Let's talk a little bit of Coinbase. We turn up Coinbase. So they're up 2.3% today. They're up from $31 on Friday, man. You're trading at 39. So there's some volatility for you. But, folks, take a look at this chart, man. That was a low, an all-time low from 429. Okay, this thing goes public. You get back up to 360, 368, and you're trading at $38. I would not be investing in Coinbase. There's other better spots in this market, folks. Yeah, that's the entirety of their chart. Can you even find a bid on that chart? This is where percentages on small numbers can be deceiving, man. You know, yeah, you just pop from 31 to 38, folks. But you take those two numbers off this chart, and it basically looks like this thing is on the path to lower prices. And, okay, maybe this is where the reverberation is the worst in terms of Bitcoin, right? Take a look where Bitcoin is. I'd almost buy Bitcoin over buying Coinbase right now, man. And don't buy Bitcoin on Coinbase, though. That's the key. Why would anybody hold anything on Coinbase when they've put into their filings that customer funds could become a general creditor? Why would you ever hold anything in Coinbase if you want to be in crypto? And maybe that's why, okay, you look where Bitcoin is. Okay, Bitcoin was trading at 17,800 on October 13th. On October 13th, Coinbase was trading at $64. It's at $38. Bitcoin is a few $100s below where it was trading at then. You have Coinbase, what is that, 26, 40, 45% off where it was trading at? So maybe that's the difference, man. Maybe Bitcoin doesn't take the hammer. Maybe it's the exchanges, because I wouldn't touch that thing, man. If I'm going to trade crypto, I'm probably going to get a cold storage wallet, keep it off the internet, keep it myself, and probably hold it for a while and make long-term plays. When you think they can. I'm not doing it yet with Bitcoin at 17,000 right now. But nonetheless, I would not touch Coinbase, and they're laying off more people, man. 20% of their workforce, second major round of job cuts in there. 18% is what they did in June. Recent pressure on the crypto sector. Yeah, unscrupulous actors in the industry. Well, nonetheless, folks, okay, they may become an unscrupulous actor if they take everybody's funds, if they go BK. They've said that's not going to happen, all right? And it's not the same thing as a Ponzi scheme if they have told you in there that you would become a general creditor, all right? And here's the thing. If anybody knows the exact details of it, please give me a call. I haven't spent the time to dig into it because as long as it's out there, folks, there's enough out there that I know enough to know what I don't know, and I don't know enough about the company Coinbase to be giving them my money to keep anything as a custodian. That's it. End of sentence, period. Yeah, a black eye for the industry. There you go. There's likely more shoes to drop. They could be one of those shoes. So keep that in mind, man. They're cutting another 1,000 jobs, 950 to be exact. Let's see. They had 4,700 employees at the end of September. They already slashed 18% of the workforce. I mean, that's not nothing, man. And I know you know that. But you're laying off 1,000 people, and you only got 4,700 people working there. They have some big problems. And it's not going to go away because exchanges are going to have a black mark, rightfully so, for a very long time, folks. Yeah, that's it. Doubting for sure. Doubt, fear. Fear is a good thing, folks. All right? Fear. Everybody has fear, man. You just take that fear and you use it to your benefit. You should be afraid of putting your money in Coinbase, man. You should be afraid of trusting anybody with your crypto. That's the way to do it, man. Don't be afraid of that, man. Feel that fear and embrace it, and stay away from those companies, man. That's the way to be. We got the market right now. S&P is negative by 1. Interesting, as we got about 48 hours till the Thursday CPI number. We'll talk a little bit more about those CPI numbers that we're expecting on Thursday when we get back from the break. We'll take a look at some of the other equities moving this morning. S&P is flat. Stay tuned, folks. We'll be right back to finish the program.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the markets in positive territory. S&P is up by about 7, NASDAQ 100 up by about 31. We'll put it back on a 5-minute chart. You still see well off the highs we had yesterday. One of the other equities, right, that they've been talking about a lot, my dad had Dave Mazza from Direction Shares on his program yesterday. You can always check out all the interviews we do, folks, right at our YouTube channel. Just search for TFNN. Every show we do, every interview we have, it's right there available for you. You can subscribe to our channel for free. And one of the things they were talking about was GBTC, that Dave walked through the listeners through, just kind of how it works in terms of GBTC, the share creation, the reason why it trades at a premium or at a discount. Now, they're talking about it in the den this morning, and you can't blame them, man, because guess what? Yesterday, over the last 2 days, from 820 or so up to 960, you're up big off the lows, but here's all I'll say, man. Okay, you zoom in on this action, and you're talking about, I say it all the time, percentages on small numbers can be deceiving, folks, okay? When you get decimated down to single digits and you get a pop, the percentages on that acceleration are going to seem like a lot until you compare them with the losses you've had recently. The acceleration we have going on in GBTC right now has you popping, and I chose just kind of a little bit of linear regression from the lows of November 21st to the lows of December 12th to the area consolidation around where we are, 775 or so. You're just at a 382, man. You're just at a 382 of a move we had from 1255 down to 746 that took place over this period of 2 weeks from November 4th to November 21st. So keep it in mind, and this one I wouldn't touch either, okay? Because if it's trading at a huge discount, there's a reason why usually, folks, all right? And with what's going on in crypto, I'd be very skeptical. Jumping around to the articles as we wrap it up, didn't get to touch on this one, but pay attention, folks. Diamond out there saying the Fed may need to hike interest rates beyond 5%. He's in favor of a pause, okay? But the part that got me here, we'll end the program on. 50% chance current expectations are correct in assuming they will boost its benchmark to about 5%, and a 50% chance that they'll go to 6%. Make sure you're assessing those risks correctly, folks. Thanks for starting your trading day off with me. S&P's up by 10. We got live programming all day. Basil starts us off next. Have a great one, folks.